For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Palantir has steadily gained attention in the world of technology and defense because of its artificial intelligence-powered data analytics software. This software plays a critical role in assisting not only the United States government, but also military branches and major commercial clients. Some of the most well-known companies that rely on Palantir's capabilities include Airbus, Merck, and Ferrari. Recently, Palantir has secured new contracts with the United States Army and entered into a significant alliance with the nuclear company. These developments have served as key drivers behind the recent upward movement in Palantir's stock price, giving investors new reasons to pay close attention to the company. In addition to these contract wins, Palantir's financial performance during Q1 in May added to the growing optimism. The company exceeded market expectations and simultaneously raised its full-year financial forecast. This double dose of positive news provided a solid boost to investor confidence. Chief Executive Officer Alex Karp emphasized that Palantir is currently delivering what he described as the essential operating system for modern businesses operating in the artificial intelligence era. This statement reinforced the idea that Palantir sees itself at the heart of a technological revolution that is reshaping industries worldwide. Since the start of this year, Palantir's stock has seen an extraordinary surge of approximately 90%. This remarkable increase has captured the attention of both seasoned investors and newcomers. However, it is essential to take a step back and carefully examine some underlying factors that could signal potential risks. Despite the impressive growth, Palantir's current valuation has raised some serious concerns. The stock is presently trading at a trailing price-to-earnings ratio of 607.43, which is far above that of other well-established technology companies. For comparison, Salesforce has a price-to-earnings ratio of 42.82, while Microsoft stands at 38.38. This substantial gap suggests that investors are paying a premium for Palantir's future growth potential, which may or may not materialize as expected. Another issue that has been raised by analysts and investors relates to the quality of Palantir's earnings. A closer look reveals that a significant portion, around 40%, of the company's pre-tax income from the previous year was derived not from its core business activities, but from interest earnings on its substantial cash reserves. This detail was highlighted by Sean Williams, a contributor to The Motley Fool, who bluntly described the company's valuation as excessive. This revelation has led some prominent investors to reconsider their positions. For instance, billionaire investor Stanley Druckenmiller decided to exit completely from his Palantir investment by selling all his shares during the first quarter of 2025. Similarly, Cathie Wood, who is well known for her involvement in innovative technology investments, sold approximately 233,400 shares of Palantir, amounting to an estimated $33 million in June. To understand the bigger picture, it is helpful to look at historical patterns. Many technologies that were initially hailed as the next big thing, such as those during the early dot-com boom, often faced sharp corrections when initial excitement gave way to more realistic expectations. There is a possibility that artificial intelligence could follow a similar trajectory. If this scenario unfolds, Palantir could be one of the companies that faces significant challenges during any potential downturn. One respected voice in the investment community who has closely followed Palantir is Stephen Guilfoyle. With over 30 years of hands-on experience on the floor of the New York Stock Exchange, Guilfoyle brings a deep understanding of market dynamics. He runs Sarge 986 LLC, a family-owned trading firm. Since he added Palantir to his portfolio, the stock has delivered extraordinary gains, rising by approximately 2,074%. This massive increase underscores just how powerful Palantir's growth story has been so far. As of July 9th, Palantir's stock closed at $143.13. Despite this substantial appreciation, the stock has not yet met Guilfoyle's target price. He continues to express strong belief in Palantir's long-term prospects, particularly in light of the current global geopolitical tensions. In a note shared through The Street Pro on July 8th, Guilfoyle described Palantir as America's most vital defense contractor. He highlighted that the company plays a key role in North Atlantic Treaty Organization defense spending, where Palantir benefits from a near monopoly in providing advanced data and analytics solutions. In Europe, few if any competitors can match the scale and sophistication of what Palantir offers, making the company an essential partner for both defense and security operations. Beyond its well-established role in the public sector, Palantir is also making notable progress in the commercial arena. Guilfoyle pointed out that the company's commercial business has been expanding more rapidly than its government-related contracts. Specifically, the commercial side of Palantir's operations has been growing at a rate of 71%, compared to 45% growth in its government government segment. This shift demonstrates that Palantir is not solely reliant on government contracts and is actively broadening its customer base in the private sector. While Guilfoyle acknowledged that Palantir's current valuation may seem stretched, he also argued that the primary threat to this valuation would come from increased competition in the future. In his opinion, that competitive threat has not yet arrived. From a technical analysis perspective, Guilfoyle observed that while an earlier bullish pattern has softened slightly, Palantir's stock continues to trade above critical moving averages. He suggested that there could be renewed buying interest from large institutional investors if the stock approaches its 50-day simple moving average. On the other hand, if the stock falls below the 200-day moving average, this could serve as a warning sign for potential downside risk. Guilfoyle currently maintains a price target of $181 for Palantir, with a key pivot level set at $156. Notably, his target remains the most optimistic among all Wall Street analysts. Turning to broader analyst sentiment, data from TipRanks reveals that the average price target for Palantir currently stands at $108. This average suggests a potential downside of approximately 24% compared to the latest closing price. The range of analyst price targets is wide, with the lowest forecast at $40 and the highest set at $155. This wide range reflects the uncertainty surrounding Palantir's future performance and the differing opinions within the investment community. Essentially, Palantir, which is known for its artificial intelligence-powered data analytics software used by the United States government, military, and major companies like Airbus, Merck, and Ferrari, has seen its stock rise by approximately 90% this year, boosted by new Army contracts, a partnership with the nuclear company, and strong Q1 earnings with an upgraded full-year outlook. However, concerns over its extremely high valuation, currently at a trailing price-to-earnings ratio of 607.43, and reliance on interest income rather than core operations, have led major investors like Stanley, Druckenmiller, and Cathie to sell their shares. While veteran analyst Stephen Guilfoyle remains optimistic, calling Palantir America's most important defense contractor and highlighting its commercial growth outpacing its government sector, he admits the stock's valuation is vulnerable to future competition. Analysts' average price target of $108 suggests a possible downside, underscoring the mixed sentiment surrounding Palantir's future in the artificial intelligence sector. With that being said, I will see you in the next video.